Once you get used to this is a very simple process and will help you weed out and only do the best possible trades. You will start learning if you should be doing a trade that's a 6 or a 7, or if it's a 3 and you want to stay away. You'll start developing your own process. Hey everyone, in today's video, I'm going to walk through step by step a short-term price action trading strategy. We're going to be able to go over and have a set of goals. Those goals are going to be as follows. You're going to learn how to set up a chart properly for the purpose of a day trade. You're going to understand your exact entry, your exact exit, and possible target price of each position. You're going to be able to identify spots where the trade may be exhausted. You're going to learn how to quantify the probability of the strength of the trade. You're going to have a deep understanding of all this by the end of this video and be able to implement it by the next trading day. As always, subscribe to the channel and click all notifications so you're aware of when we put out new educational videos, which we do quite frequently. We also put out daily wrap-ups at the end of every day, Monday through Thursday, and live streams Monday through Thursday. There are 6 main criteria we are going to use today. Number 1 is time frame. Number 2 is moving averages. Number 3 is VWAP. Number 4 are candlesticks. Number 5 is RSI. Number 6 is volume. Time frame. We are going to be using a 2-minute time frame. If you're not familiar with this, every trading platform has a 2-minute time frame. You just have to go in and change your settings. We are going to use a 2-minute time frame because based upon the movement of algorithms and high frequency traders, the 1 minute has entirely too much noise now. As always, we have to adapt to what is going on around us. Next, we want to use the first moving average is going to be a 21 data point moving average. In other words, every 2-minute bar is a plot of that yellow line. What's important about that is for us to understand what it represents. It represents roughly 42 minutes. There are several things we want to take into account when looking at this 21 moving average. The first thing we want to take into account is, are we trending higher or lower than the average? The second thing we want to look at is the trajectory of the average. Is the average pointing up or is the average pointing down? If it's pointing down, then we are in a downward trend. If it's going sideways, we are trendless. If it's pointing up, then we are in an uptrend. Next is the 200 moving average. The 200 moving average will give us more of a time frame of a longer scale for a shorter time period, obviously, but a longer scale. What this does is this gives us more of the pattern of the longer trend. We'll be using the same principles. Are we above or below the 200 moving average? Is the 200 moving average pointing up or down? Before we move any further, let's just recap. We're using a 2-minute time frame. We're using a 21 moving average on a 2-minute chart, and we are using a 200 moving average on a 2-minute chart. Next, we are going to add VWAP to the chart. VWAP is volume weighted average price. The volume weighted average price is simply a measurement that shows the average price of a security adjusted for its volume. It takes the total dollar value calculated of trading in the security and then divides it by the volume during that period. So you can see the line clearly here. It's the blue line. Now, what's important about this line? What's important about this line is this is where institutional traders look at either entering or exiting positions. This is the line on how institutions are judged during the day about whether they had a good position fill on a buy or a sell. What we're going to focus on for our short-term price action day trading strategy is simple. We're going to look at the line. We're going to see if the line is pointing up or down. We're going to see if we are above or below the line. That is going to tell us that if institutions are buyers or if institutions are sellers. And then the curvature of the line is going to give us feedback to whether or not we are bullish or bearish. If the line is pointing up, it's bullish. If the line is pointing down, it's going to be bearish. Next, we're going to focus on candlestick patterns. We're going to use simple candlestick patterns. We're going to be looking for bullish engulfings, bearish engulfings, bullish hook reversals, and bearish hook reversals, as well as bullish and bearish haramis. These are going to give us spots that are going to indicate where we may place our entry. Comment on this video and let me know what other types of videos you want to see. The reason I actually created this particular video was based upon the comments that are below. I find them extremely helpful in creating content that can add the most value. Next is Relative Strength Index, or RSI. What we're going to focus on with this RSI is understanding what it's best to be used for. This is a momentum indicator that measures the magnitude of recent price changes to analyze overbought or oversold conditions. If we are over 70, we are considered overbought. If we are below 50, we are in oversold territory. If we get below 30, we are considered grossly oversold. We will be using the RSI techniques that were shown in previous videos. So everything that we're going over here, from the candlestick patterns to the RSI, they're all in previous videos on my channel. Next is volume. We use a 20 SMA line to determine the average volume. Volume is pretty self-explanatory. Each line determines how much volume was done during that period of time. Red obviously is referring to selling volume. Green is referring to buying volume. Now that our chart is set up, let's review each part of the chart. To start with, we are using a 2-minute candlestick. Each bar is 2 minutes. We are using a 21 moving average. We are using a 200 moving average for a longer term understanding of the trend. We are using VWAP to understand where the large institutions are buying and selling. We are going to use our knowledge of candlestick patterns, such as bullish engulfings, bearish engulfings, bullish hook reversals, bearish hook reversals, just to name a few, as well as bullish and bearish haramis to look for entries. We are going to use RSI to determine if we're overbought or oversold, but more so to determine the magnitude of the move and to look for divergences. We're going to use volume, and we're going to use a 20 SMA line to determine if we are above average volume or below average volume. For a list of all 6 criteria and how they are actually calculated, there will be a link in the description. That link will also include the next part of the setup that we're about to walk through. Now that we have all our criteria, we can put them through a system. The system that I'm about to explain to you is going to be a way that you can quantify the strength of the trade. Every one of the 6 criteria will be ranked. The ranking system will be as follows. 1 will be the weakest. 9 will be the strongest. Let's get into how we're going to determine if we have a strong trade or a not so strong trade, and how to quantify each one of these indicators. The first thing we're going to do is we're just simply going to look at the candlesticks. By looking at the candlesticks, we're going to determine, are the multitude of candlesticks green or red in the chart? Does that fit my criteria? Am I looking at being long or short? Therefore, if I want to be long, I want to see long green candles, and I want to see more green than I want to see red. If I want to be short, I want to see more long red candles, and I want to see a multitude of more red candles than green candles. Determining this is going to give you 1 point. If it fits your criteria and you want to be long, and in this case we have more green bars than red that are significant, then it would fit my criteria and I would get 1 point. If I wanted to be short, it may not fit my criteria at this particular time, because while I do have some long red bars, the majority of the bars are green. Next, we want to look at the moving average. If we're looking for a long position, we want it to be above the moving average, which will give us 1 point. And we want it to be above the moving average with the moving average pointing up, and that would give us another point. So in this case, if we were to enter, say, here, we would be above the moving average, and the moving average is pointing up. Therefore, our system would give us 2 points. If we were entering here, we would be above the moving average, but we are trading down. Therefore, we would get 1 point. If we were to enter here on our long position, we would get 0 points. We are down on the moving average and we are below it. Once we review all the criteria, we'll go through some examples. Next, you review the 200 moving average. Are we above it? Yes, we are. Is it pointing up? Yes, it is. Therefore, you're adding 2 more points. VWAP. We're going to look at VWAP and we're going to determine, are we above VWAP? Are we below VWAP? If we wanted to be long, we want to be above VWAP and we want VWAP to be pointing up. For example, here we have VWAP and we have it starting to point up. While it's pointing up, in this example, we want to buy it when VWAP is breaking over. Why? That gives us 1 more point. And also the trajectory of VWAP is pointing up. So if we are to enter here, we have 1 point because we are above VWAP, and we have another point because VWAP is pointing up. RSI. We want to look at RSI and make sure that RSI is fitting our criteria. In other words, we want to make sure that we don't have any negative divergences or positive divergences if we want it to be short. Now, what do I mean? Well, as you would know from our previous videos, let's say that we were going to buy right here because we are above the 200, it's pointing up, above the 21, and it's pointing up, above VWAP, and it's starting to curl up. And then we break out, and we want to buy because this evening star flipped. Now, we buy here, but when we do that, we see a divergence. This would be a negative divergence in RSI because this is obviously a higher high, and this is a, say it, you have a high, and then you have a lower high compared to the higher high. So that negative divergence would give us a 0 and would not give us a point. If we were under the 50 and then popped over that line right here, that would give us a point. If we did the same thing here, where we undercut this high and then made a higher high, that would give us another point. Those 2 scenarios would give us a point. This RSI divergence would give us 0 points. Volume. Are we above the 20 SMA or are we below the 20 SMA when we enter? So on the long side or the buy side, we want to make sure that we have above average volume when we buy. If we have that above average volume, we're going to see us get another point in our ranking system. So if we have this, we can get a point if this was an entry right here. If we look over here, there's another entry, another point. So what you're doing to give yourself a point is you're very simply making sure that your green volume is above the 20 SMA when you put on a trade. To recap, moving averages. Are they pointing up? Are they pointing down? Am I above them? Am I below them? Each one of those is a point. There are 2 moving averages that we're using for a total of possibly 4 points. VWAP. Am I above or below VWAP? Is VWAP pointing up or down? Based upon this, you can get 2 points there. So between the moving averages and the VWAP, you can get 6 points. I want to take a moment and point out that you can see that by utilizing this price action strategy, that VWAP and moving averages are going to have the most weight. Next, you would look at this chart and say, do I have green bars or red bars? Are the green bars more significant or are the red bars more significant? If they are more significant on the green bar side and you're looking to buy, you would give yourself a point for a total of 7 points. If the RSI was in your favor, by having either a positive divergence or by going in the direction in which you are predicting it to go, you would give yourself a point, 8 points. If the volume is greater than the 20 SMA, you would give yourself another point for 9 points. This will all be in a link in the description below that you can get simply by clicking. All the criteria and how to do this ranking system. Once you get used to this, this is a very simple process and will help you weed out and only do the best possible trades. You will start learning if you should be doing a trade that's a 6 or a 7, or if it's a 3 and you want to stay away. You'll start developing your own process. But what I'm doing here is giving you the tools and showing you how to quantify this so that you can go and do it yourself. Let's do a few examples. Let's take NVIDIA and let's look at NVIDIA as if we wanted to put on a short position. Number one, do I have more green bars or red bars? I have more green bars. So 0 points. Number two, is the 21 pointing down and am I below it? Yes, I am. 2 points. Is the 200-day moving average, am I below the 200-day moving average? Is the 200-day moving average pointing down? 2 points. So far we have a total of 4. Am I below VWAP and is VWAP pointing down? Yes, it is. Total of 6 points. Is the RSI going in the direction and acting in accordance with what I think? Yes, it is. For a total of 7 points. Is the volume spiking? Yes, it is. So this trade would give me a total of 8 points. We could have used this very simple doji right here and the break of that doji as an entry. And right now we would be up about $1 in the trade with the strength of an 8-point move. It's going to be up to you to utilize these systems and then find out what point system is going to be your cutoff. In starting with this system, I'd recommend that you consider doing nothing less than a 6-point trade. In this example, we wanted to go long or a buy position. So we start by looking right here on a test of the 21 moving average, which is usually a good spot to look. We have a morning star position. And when we get over this hammer with this line, we want to initiate. Are we above the 21 moving average? Yes. Is the 21 moving average pointing up? Yes. Are we above VWAP? Yes. Is that pointing up? Yes. So far, we're up to 4 points. Are we above the 200? Yes. Is that pointing up? 6 points. Now, we wouldn't know from this side to the right what is going on yet. So we only have this data from here over. And we would look at this and go, yes, we have more green than red. Therefore, we have another point, 7. We would then look at the RSI and see if it's going in line with what we wanted. And the answer would be, yes, it is. 8. Do we have the volume? No, we do not. We do not have any volume. Therefore, this would be a total of 8 points. Let's say that we want to enter this trade and we were looking at this pattern and seeing it base since the morning and then break out of that base right here. And we want to enter. We would go through our system. Number one, do I have more green or red? I would argue that it's 50-50. So since it's 50-50, we would be flat. Am I above the 21? Yes. Is the 21 pointing up? Yes. There's 2 points. Am I above VWAP? Yes. Is VWAP pointing up? Yes. 4 points. Am I above the 200? Yes. Is the 200 pointing up? Yes. 6 points. Does the RSI coincide with my trade? Yes. So right there, you have 1, 2, 3, 4, 5, 6, 7 points. Do I have enough volume? No, I do not. So I have a total of 7 out of 9 on the trade. Now, what you're focused on is this counting system and then seeing how you do with the system on those 3 ideas. Now, it's important to note where you should be looking at possible entries and exits are right around these levels. You want to look for possible entries right on VWAP, and you want to look for possible exits on exiting these positions if they break one of these moving averages. So in other words, if you're in this trade and it's doing exceptionally well, and then you start seeing the first sign of a break, such as here, this provides you an exit strategy. And you can see how you've underperformed for the rest of the day on this trade, even though you stayed above VWAP. So you use these as guides for where you're going to exit or where you might enter. Use these 3 moving averages to determine that. You also want to determine the trajectory of those moves as far as entry and exit. Now let's take a look at another example. We can see clearly how we are above the VWAP, and then when we break below the VWAP, the trade ends. When we break below the 21 moving average, the trade ends again. When we break below the 200, the trade ends again. So you can utilize these as guides. We try to break over the 21, we're unable to. It's still pointing down the 21. So if you wanted to enter this trade and you're looking here, you have a downward slope on all 3 of these. And on top of that downward slope, you're below 2 of them. So this would not be an optimal spot to buy. But if you're looking to buy it, at least you're above this. Now you may have tried this again, but again, you have a very low count. So what would you be using this for? Well, you could use this for setting you up. In other words, look for the curvature and then look for an entry possibly around here or an exit around here, and then see how you react and respond to them. Now you can see when you're above all 3 how the stock finally reacts and starts going. So this provides an entry right here. You're above the 21, it's pointing up. You're above VWAP, it's pointing up. You're above the 200, but it's flatlined. But you're above it all, and this provides an entry, allows you to stay in the trade. This break of this line gives you an exit. Using these moving averages in VWAP for entries and exits and target prices is going to save you a lot of time and money. If you look at these levels, they are consistent, hitting there, breaking them. The more you break, the more positive the trade is. If you're using this 21 as a way to get out of the trade, yes, it might stop you out sooner, but it also will provide you another entry. Remember, these are short-term trades. We're looking to get in and out of the trade during the day. So we take what we can get and then we move forward. In regards to this one, perfect example. Broke VWAP, broke the 21, your trade is over. So these are clear signs of either entering a short position through your count system and ranking system or exiting your current day trade. And we can see the result of this and how that plays out. This was a perfect example of one. As well, here's a great example. You can see how you're holding the 21, providing opportunities to buy along the 21. Then you flip here and you underperform. You now have a system that you can put in place that will allow you to meet the following goals. You now know how to set up your chart properly to day trade. You now understand exact entry and exits and possible targets of each position that you enter on this. You know where to identify your stops and where the trade might be exhausted. You know how to quantify the probability of those trades. And you should have a deep understanding of this enough to implement this and see how you can utilize it in your trading system. Please refer to the link below. I have everything set up in there so that if you get a copy of it, you can very simply see the ranking system, how the charts are set up, why these levels are picked. Sometimes looking at things in written form along with a video tends to help. Please comment on this video. Tell me what you liked about it, didn't like about it. It's very helpful in me creating content. Also, like the video because that supports the channel and lets me know that you want to see more content like this. And please share this video with somebody else. Thank you for watching. Remember, trade to win.